Hello and welcome to the Business Standard Banking Show. In the last few years, L&T Finance Holdings, an upper layer NBFC, has transformed itself into a retail lending organization from a wholesale one. Now, 88% of the assets of the company are to the retail segment. The man behind this transformation is L&T Finance's MD and CEO Dinanath Dubhashi. He joined L&T Finance in April 2007 and is at the helm of the company since July 2016. We have Mr. Dubhashi with us today to talk about his journey in L&T Finance. Mr. Dubhashi, welcome to the show.
Thank you, and thank you for calling me, Manojit. Thank you.
In the last few years, a strategy roadmap, namely Lakshya 2026, was initiated. Where does L&T Finance stand in terms of achieving Lakshya 2026 targets?
Yeah, thank you, Manojit. See, Lakshya was, a strategy which was made from FY22 to 26, and that strategy was meant with only one goal, is to establish L&T Finance or transform L&T Finance into a digitally enabled, customer-centric retail finance company, and a leading one at that. But we thought that we should also place some quantitative targets, milestones to measure it, because otherwise these only remain words. So we put 4 quantitative targets. One is that just about 2 years back, 2.5 years back, we were almost a 50-50 wholesale retail company. We said that by March 26, we will become at least 80% retail. That was the first target we put. Then we can call ourselves a retail company. Second target we put was that we will say we will grow retail, because we didn't want to achieve that only by reducing wholesale. That we will grow retail book by at least 25% every year. And I will maybe talk about later on how we achieve that. Third was, while doing this growth, we should keep asset quality pristine. And because of that, we set a goal of that our GNPA, GS3 as it is called, should be maximum 3% retail, and your NS3, net stage 3, should be maximum 1%. And last but not the least, all of this should convert into profitability. So we set a target of 2.8 to 3% of retail ROE. So these were the 4 targets that we went. Now I will answer your question. Where are we vis-a-vis this?
Right.
So number one, as you yourself said in your introduction, retail has already become 88%. And the chances are, not chances, we are confident that we will end this year at well above 90%. Very closer to, in fact, 95%. So that it is that successful. And it has been successful because of 2 reasons. One is retail growth. We will talk about that in a minute. But the wholesale team has done wonderfully well to reduce our wholesale book rapidly. There were lots of people saying that we will have to make big losses while taking, etc. Nothing like that has happened, which is also a testimony of the quality of wholesale book that we had, that we have been able to reduce it. And the book, which was close to 45,000-50,000 crores at one point of time, in September was about 9,500 crores. And, we are progressively reducing it as we go ahead. As far as retail growth is concerned, you would think the target was 25% growth, and we have consistently achieved more than 30% growth. Okay. Now, this has happened by a strategy, number one, of saying in our strong products, we will keep acquiring maximum amount of customers. But more importantly, we will cross-sell and upsell to these customers once they are established well with us. We will do it both by having very strong digital channels, which we have done very well, but also realizing the importance and underlining the importance of our physical channels. We were very strong in our physical channels, especially in rural India. And that's what we said, that, okay, those physical channels also will be strengthened further and made sure that the growth happens. And that has gone very well.
Right.
And that is in rural India. In urban, also we took good steps. And as you know, Mr. Sudipta Roy has joined us from ICICI. He was heading urban finance there, urban unsecured finance. And he has joined here. He will be taking over from me actually in a month's time.
Right.
But he is already the chief operating officer for the last 6 months, and he has done wonderfully well to grow the urban finance also. So this has gone very well. Credit quality, instead of 1% net stage 3, we are at 0.69 or 0.68 or something like that. So already we have done very well, and we will improve only from here.
Correct.
And last but not the least, retail ROA, where our target was 3%, we have already reached 3.3% as of September. So I know a little bit long answer, but it shows that we have done on Lakshya 26, and Lakshya 26 is still 2.5 years away, right?
Exactly. I'm coming to that. So you have overachieved your target 2 years before the date. So what next now for L&T Finance? What is the next phase of growth, say over the next 2 to 3 years?
Good. Very good question. So listen, Lakshya 26 is a 4-year plan, and we will stick to it, right? But the very important part is we realize that what we have achieved today is in terms of ratios. All the ratios we have achieved, right?
Yeah.
The important thing is keep growing from here at this rate while keeping asset quality and profitability pristine.
Correct.
This is important, and hence the future strategy is all about sustaining this growth. And we have already put that strategy in place for the next 4 to 5 years also. And March 26 will be a part of it. This strategy is around 5 pillars. The first pillar is increasing customer acquisition even more. So right now we acquire close to 7 lakh customers per quarter, new customers. We want to, within 2 to 3 quarters, we want to increase it to 1 million. And then further 3 quarters, we increase it to 1.5 million, and so on.
Right.
That is number one. And there are many businesses which are bringing in these new customers.
Correct.
Along with that, we also want to increase our upsell and cross-sell to good customers out of this. We don't sell any loans to delinquent customers. It is good customers out of this, once they are tested with you, to sell more. Now, the advantage of this, Manojit, is when you do it to your own customer, one, the credit quality is superb. So your collection cost, credit cost is good. But second, your acquisition cost is also almost 1/4 or 1/5 of if I acquire this customer from outside. So it is good for the profitability also.
Right.
The second pillar is making sure that our credit metrics and risk keeps improving from now, even further, right? And that is happening by tremendous use of public digital infrastructure. So data today is available, subject to the right secrecy and the right parameters, abundantly and democratically in India, right? I'll just give you an example. Till 6 months back, banks could only access the deposit data of people, and I had to be satisfied only with income data or credit bureau data. Today, with account aggregator being introduced and working very well, subject to the customer giving me permission through OTP, I can access his bank accounts and analyze it. So this is just one example of how data is being democratized.
Recently, there was another milestone which was completed, the merger of the subsidiaries of L&T Finance in early December. What will be the L&T Finance loan book look like post the merger?
No. Actually, in the loan book, there will be no difference, because the loan book was, we used to always publicly declare the combined loan book only. Okay. The loan book will remain same. Advantages are many. First of all, the merger increases transparency. We are L&T. L&T name stands for integrity and transparency. Having just one company increases transparency, that there are no 3-4 balance sheet, then a holding company. All this was there for a particular reason, because we had a mutual fund, and mutual fund, NBFC is not allowed to have a mutual fund. That's why this structure was there. Now that we have sold a mutual fund, we have first thing we have done there and merged it. So transparency and integrity has become more clear and obvious.
Right.
Second, treasury management, there is tremendous amount of synergies which come. Because instead of managing 3 books, you have to now manage 1 book. And that reduces cost of liquidity and hence will add to the P&L, right? Third is simply bandwidth of management, right? Having so many board meetings, having, basically 3 sets of accounts. There are everything, 3 sets of compliances. Management bandwidth is taken up. Right? So which will actually save actual cost in rupees crores.
What is your loan book now, and where do you see it by March end?
So retail loan book, I wouldn't be able to specifically talk about where I see by March end. But retail loan book in September, we were close to about 70,000 crores. To be exact, 69,500 or something like that. And we are very confident that we are growing by, more than 30% year on year. So
Right.
that we should grow. If we maintain that growth rate, we should be close to 80,000 by the end of the year, retail loan book.
And what is the overall size of the loan book?
Overall, the wholesale is 9,500.
900.
And as I said, let's take 80%, 80,000 suppose we reach, and that is 92, 93%, then you calculate where the wholesale book will.
Correct. Now, coming to the funding part, RBI has recently increased the risk rate for bank loans to NBFCs. Has your funding become more expensive now post that RBI guidelines?
RBI wants especially large NBFCs to further diversify its source of funding. That's the
correct. I'm coming to that. Yeah.
So the good companies, not only us, good companies, the source of funding is always well diversified. So I will give you just my example of last September. Our funding, non-PSL funding from banks was between 25 to 28%.
Okay.
Right? Out of total 100% treasury, it is only that. So that is the portion which gets affected, and whatever is the increase, then we will negotiate it with banks, etc. It will roll out. But because of that, we don't expect that the actual impact will be more than 10 to 15 basis points. Okay, and which also
on the margins, on the cost of funds.
On the cost of funds.
Cost of funds.
Margins, what it will be will depend on how much we are able to pass on out of that, etc. But that's not important. The important part is over the last 4 to 5 years, we have continuously worked on diversifying the source of funds. Even recently, we closed it, very recently, I mean, less than a month back, we closed the transaction of about $125 million with Asian Development Bank.
Correct, yes.
So there are examples. These are just, $125 million is not a lot, but it is not small also. It is 1,000 crores.
Yes.
So like that, more and more such transactions will happen to further diversify. But the capability is there, and not only us, many good companies, this capability is there to borrow also from outside. So commercial banks was a very important source of funding from us, continues to be important source of funding, but it is not going to be an impact which we can't handle.
Commercial paper, are you going to be aggressive in raising funds by commercial papers?
See, we have, our ALM, actually our asset liability management allows us much higher use of commercial paper. But we have kept our commercial paper limited to around 7% of the overall balance sheet or so, right? As the book goes up, as the book grows, we may increase it a little bit as a matter of tactics, but not as strategy. It's not like from 7% we will go to 15% or 20%. It's not like that. But as a matter of tactics, if commercial paper is, one, it should be cheaper. Second, it should fall well within the guidelines of asset liability management. From quarter to quarter, we may change a little bit.
What are the new lines of business that L&T Finance is planning to enter in the near future?
First of all, we are very clear that anything that we do will be completely within the realms of retail finance.
Right.
Away from retail finance, there is no plan, no thought of doing anything. Right. Within retail finance, there is urban and there is rural. Within urban, we have two types of customers. One is individual customers, to whom we do home loans, to whom we do, consumer loans, which is quite limited, but we do consumer loans, and we do two-wheeler loans, right? Then there are urban businesses where we do business loans.
Business loans.
On the rural side, we have rural business loans, and we have tractor funding. Anything that we do more will be for these customers. We are a very customer-focused company. So we will see that, okay, our customers in these lines, what more that they need. So the product expansion will be a continuous expansion. What it is called a contiguous example. Right? Like let's say my rural business finance lady who borrows from me needs a loan against her property. So that is the product I have launched. And it's just launched and the first pilots and all are going on. So it is not like I will launch something completely different and go looking for new customers.
Okay.
It is for this customer segment What are the contiguous products is what we will launch, and that is how we will expand.
So customers will drive your product choices.
Absolutely well said. I could not have put it better.
And finally, you will be handing up your boots in January. The company, as you said, the company has already chosen your successor. What will be your advice to your successor?
I think he has been here for 6 months already. He knows the company well. He has bought into the company strategy. The team has bought into him. And we keep exchanging our views all the time. I think he doesn't need any specific advice at this time. That is the very idea of this longish handover. So he joined on 1st of July. He will be taking over as MD CEO on 23rd of
January, yeah.
And then till 30th April, I'm still there as a director.
Right.
So we are very similar thinking. Our strategies are very similar and continuous. So there is no big, sudden U-turn, right turn, left turn. So there is no specific need of an advice, and he is an exceptional professional. So I'm sure he will do extremely well.
On that note, it was a pleasure talking to you, Mr. Dubhashi. Thank you for speaking to Business Standard and wish you all the best.
Thank you. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.